List the documents utilized in the operation of a business. State three reasons why it is necessary to keep proper records of business transactions. Describe each of the following types of insurance policies: public liability and employees liability. Here we go. So, the first part is to list three documents utilized in the operation of a business. So, of course, any three would work. So businesses should use invoices, which would be sent by seller to buyer, showing goods sold and amount owed. So yeah, the invoice doesn't always necessarily mean that someone owes, but for instance, if someone is querying products, they could, like the prices and stuff, they could get a quotation, or some businesses will send them an invoice, and the invoice will contain the products and or services being offered and the cost. Receipt, which shows proof that payment has been made. So yeah, um, for instance, if you all go to a store, I know it's not usual for most people to do this, but recently there was a situation where a woman went to a store. Apparently, she was looking to leave the store with items in a bag, but there's no receipt, so there's no proof of payment. So automatically, people will think you are stealing, right? So yeah, having a receipt is important for proof of payment. And worse yet, if it is you have to query an issue or get something rectified due to a defective product, you need that receipt. Also, purchase order sent by buyer to request goods. So if someone wants to buy goods, let's say after they receive a quotation, they could send a purchase order requesting that they want to buy these goods. Some other acceptable answers would be a delivery note, which is normally given um, it's normally given when delivery of excuse a product, or yeah, product mean, because it's not really for services, but usually for if someone or business purchased items and was delivered via the company itself, the company's delivery vehicle or workers, delivery guys, however you want to call them. Yeah, a delivery note would be issued to as proof of delivery. Because some people say nobody came and delivered the stuff, so delivery note is important for that. The credit note, if it is someone or business returns good to a company and the company doesn't really give cash refund, they could do a credit note which simply show that they owe or have some outstanding balance for the customer, which they could use in any future payment. Um, a debit note does the opposite. So a debit note is normally it is used to request like a deduction in the amount owed and stuff for any damage or return goods. So one is used for to show how much a business owes a customer for return goods. The debit one, on the other hand, is normally issued from the buyer and given to the seller, and it's used to request any return of funds, right? So if they want to actually receive the money, the customer has to issue the debit note. And I mentioned quotation before, which is normally sometimes they call it an estimate used to show the total amount of goods. What's the word I'm looking for? Yeah, the total for goods that a potential or even existing customer intends to purchase. All right, so it gives them an estimated cost of how much they would likely pay if they order the goods on the quotation. Number 2A, Roman numeral 2, say 3 reasons why it is necessary to keep proper records of business transactions. One, to track income and expenses. So it helps the business know if they are making a profit or a loss. I think nothing but that is a wise thing to do because it will help them to make adjustments where necessary, especially if they are incurring more losses than profits. Also, to assist in decision making, owners use records to plan, budget, and control spending. Definitely. So that those financial documents would reveal whether or not the business is overspending, whether they need to cut down on expenses, increase income, stuff like that. For legal and tax purposes, so businesses must provide accurate records to governmental authorities. Yeah, the when businesses start to produce a certain amount of profits and revenue, the government will tax them. Hence, proper records are essential or vital because um, if it's correct, the business would be charged the right amount for tax. Imagine it's less than what it should be when the records are inaccurate and it's less than the figures are shown less. The company would be charged a lesser tax, which can later lead to penalties and additional fees, which is not going to be good for the business. And on the opposite end, if it's still inaccurate, but the figures are larger, then the business will end up paying way more taxes than they should. So ensuring that the records are accurate and correct is so important. Yeah, other points or answers could have been to prevent fraud, to monitor cash flow, and to provide evidence of disputes. Okay, so yes. If you have questions about anything, please let me know because I'm trying to speed up a little bit here, okay? I'm trying to, okay? So 2B says describe each of the following types of insurance policies. So public limited insurance. This covers the business if a member of the public is injured or their property is damaged due to the business activities. For example, a customer slips in a store, insurance pays compensation. Yeah. So that is what the public liability insurance is. So if any of you ever decide to start a business and you are operating from a physical store, at some point, invest in public limited insurance because, of course, nobody wants a customer to injure themselves. But if it happens, sometimes customers will come and sue the owner. So protecting yourself via public limited insurance is so important. The next one, employees liability insurance. This covers the business if an employee is injured or becomes ill because of their work. For example, a worker gets injured using machinery, insurance covers medical costs or compensation because those bills can be a lot, and it may not be easy for the business to pay that out of pocket. Insurance normally multiplies your money. Yes, I'm telling you, insurance multiplies your money. So it has some people who would be, and probably businesses who are not all, who I've heard one or two people talk about they were suspicious about insurance. But I'm telling you, all me, myself, currently as an insurance holder, insurance multiplies your money. So let's see, just giving a random example. Let's say a business owner, right? The only money they have saved up as reserves or set aside for any emergencies, 30,000. Yeah, I know that sounds like a lot. Well, assuming an employee gets injured, depending on how severe it is, I've seen, I don't know if you'll watch news, but sometime last year, I think a man fell in the warehouse where he's working and died. You can't pay for life. But even in the case of serious injuries, um, where serious injuries are concerned, let's assume someone get paralyzed as a result, or they lose their limbs or something, and they have to cover medical bills. They wouldn't have to cover it. The company has to cover it. $30,000 not going to do a lot. And then the business would most likely struggle to pay off the rest of the bills. Hence, investing in insurance could save the company so much stress, because it depends on how long as well they have the insurance policies. But I know people who had insurance and got 500,000 and stuff. They did not invest 500,000, but that money compounded and grew. It's like an investment. Just like what I was telling you before, um, I was talking about the public limited companies. If you have money, you could invest there. Just like how money could grow in a company as a shareholder, your money could grow with what you call it, these insurance. But you have to learn about them, you need to know about them, and you need to choose the right ones, of course. Yeah, so that's something I just wanted to mention there. So having insurance could ease up a lot of financial stress for companies, but not just for companies, for people in their individual ones as well. There's like health insurance, there's insurance to protect your home or Californians. Okay, if you have questions, you know exactly what to do. Make sure and ask the questions so that you can obtain clarification. In the meanwhile, Part C, define each of the following principles of insurance and state one example of each principle. So the principles would be insurable interest and indemnity. Here we go. So insurable interest. This means that the insured person must have a financial or legal interest in the item or person being insured. They must suffer a loss if damage or death occurs. I read them too fast, sorry. Okay. Example, a business owner insures their shop because they will lose money if it is damaged by fire. Yeah. Um, that's true. So insurance don't normally, and I'm emphasizing here, don't normally just give you money like that, right? Um, for instance, I'm not telling you everything, but my insurance have different components, right? It have like multiple insurances in my insurance package itself, right? Um, so one of my insurance components or parts consists of um it's a health insurance. It has other things with it. It's not just health, it's multiple insurance in one. And if I don't get any of those illnesses in the insurance ever, I think they told me once I'm alive, probably next 20, 30 years, I could be refunded that money. All right. And it's not normally just what you invested, it's actually a compounded amount. But because my insurance policy is unique, it is a policy where you can actually withdraw money. And the reason why I can withdraw money, which is not normal for a lot of insurance, is because my insurance also includes um, a savings component. So because I took my insurance with savings, I have been able to withdraw money already from my insurance. Anytime else I want to withdraw money, I could. It wouldn't come out from like the policies itself, but it will come out from my savings section. And the money grows. So the longer you invest year in, year out, and depending on how much is paid on a monthly basis, it compounds. It's not like in a bank. Now, again, I know you all are young, so you all may not understand every single thing. In the bank, if you put $500 in the bank, and you don't put any more money for a few months, what is going to happen is that money will start to decrease because the bank would be taking off fees. But with insurance, you are required to pay monthly. But assuming you didn't, the $500 will grow a little every month, but you still have to keep investing or putting money. So why am I sharing this? Is to explain to you all that when it is with insurance, right? When it is, how to explain this? Um, just now, hold on. I kind of lost track of what I wanted to say. When a business, when a business pay for insurance, only based on, let's say for instance, the owner like this one, they took out insurance in the case of fire. If fire damages their property, then they could go into the insurance company, claim the insurance, and depending on how long they invested on their policy and stuff, they might be able to get, they will get enough money to cover, to recover and fix the damages, right? So the insurable interest just ensures that the person who's insured, um, they would be covered for what exactly they insured. So yes, it must be for a loss, right? So normally, yes, something that's been lost, something that's been damaged, or even death as well, are reasons that persons could be insured for. The indemnity part, so this principle means that the insured should be restored to the same financial position as before the loss. No profit should be made from insurance. So example, if goods worth 5,000 are damaged, the insurance company pays 5,000, not more. So yeah, that's the thing. The insurance company is not giving you money to make you rich. That's why it says there, no profit, no excess. They would um disburse or pay out the amount that you lost, especially if you had an insurance in the case of fire or flooding or any of those disasters or, you know, yeah. Okay, so I hope that is clear with you all. And if you all have questions, do not hesitate to ask them. All right, so here we go with a bit of a case or so. So Mr. Cole has a phone that he would like to sell to his 13-year-old neighbor, Rahul. He approaches Rahul, who is very excited about the phone, and also the phone is expensive. It is the latest in the series. Rahul tells Mr. Cole that he could only deposit half of the agreed up price and that he would pay the balance at the end of the month, at which time Mr. Cole would deliver the phone to him. Rahul's mother hears of the transaction and tells Rahul that he recently received a phone and so should not have agreed to purchase another. She goes to Mr. Cole and asks that he immediately returns Rahul's deposit. Mr. Cole bluntly refuses and insists that he had a contract with Rahul and that he would sue for breach of contract if Rahul did not go through with the agreement. Oh boy, we have a serious situation here. So I hope you're paying attention, eh? I know why I'm saying this because this can happen in real life, and a lot of people don't know when it is they're in contract with someone. Based on what I read here, um, Rahul is definitely in contract with Mr. Cole. But he should not have agreed. He should have communicated with his mother first because he's 13 years of age. However, the only thing that could void this contract is his age because he's not really of an adult age. 18 or more to be in a contract legally. So that is the only thing that can make him get out. Everything else that I read here, the fact that he agreed to take the phone, deposit half, and pay at months and all that stuff, that is an agreement. But the only thing that can void this agreement and make it um well impossible for Mr. Cole to sue is his age. So going through the information here, it says identify the principle of contract. The principle of contract is capacity to a contract. What does that mean exactly? It simply means that in order for a contract to be valid, to be considered binding an agreement, according to law, um, the persons who are involved in the contract, in this particular case, it would be Rahul, the young one, and what's the next person? Cool guy here, the grown folk. Both persons must understand what they are getting into, right? They must be able to understand what it is they are agreeing to. So in other words, it cannot be someone who's insane, not in their right mind. It's definitely not. And they have to be normally of age such as 18 or above. So since this is a child, even Mr. Cole should not have made an agreement with him. However, some adults don't care and they try to exploit younger ones. So hence he proceeded without. If that man, Mr. Cole, was considerate, he would have told Rahul, um, can you get your parents, whether it's his mother only or both parents, so we could communicate this to ensure that the parents is in agreement because in order for that to really be valid, the parents must have a say because again, he is not of age according to law to make an agreement. Even though he did make an agreement according to law because of that age factor, that could void the agreement. So the next part is saying, explain whether Mr. Cole is likely to succeed, meaning to sue Rahul if he breaches. Breach means to break and don't follow through with the contract. So Mr. Cole is not likely to succeed if he sues Cole. And I said the main issue is because of his age. Everything else would have been fine. Had he been 18 years and over, yeah, Rahul would have gotten some serious problems with the law if he breached that contract. But his age, good thing there's a law that protects minors is what he's getting away based on, right? He would not get in problems with Mr. Cole based on his age. So under contract law, minors generally do not have the legal capacity to enter binding contracts. Because remember again, I don't know about you, but when I learned about contracts, I can't even remember, so I'm not going to lie because I'm going to lie. But when I wrote POB, what year was this? 2011. I cannot remember if my POB teacher would have taught me anything on contracts then. However, I know for sure, I am certain, when I was in university, we had to study business contract. So based on that, that's how I learned in depth about contract. Um, but before that, when I was a minor and still in high school and stuff like that, I didn't know nothing about no contract. But yeah, even when an individual turns 18 years, and if you just get into a contract and you agree with someone, the contract doesn't have to be written. You could get in problems with those things. So yeah, you can't just tell somebody, I give you this, but then you come back next day and I'll give you again. If it is you are unsure whether you want to do something, you can ask the person, can you give me 24 hours, 24 to 48 hours if you think you need time to communicate with other people, whether it's family, friends, to get advice. Yeah, like don't just agree to something just like that because you it becomes binding, especially when you're 18 years and over. Okay. So yes, contracts with minors are usually voidable, meaning the minor can choose to cancel them. The phone is not a necessity since Raul already has one. So the contract is not enforceable. Therefore, Raul can refuse the contract and Mr. Cole can force him to pay the balance for sure. The next part is suggest two peaceful ways to settle the dispute. One can be refund the deposit. So Mr. Cole returns Rahul's money and cancel the agreement. It already looks like Mr. Cole knows about that, but that is one way to keep the peace. And then the other option, if that doesn't work, is negotiation or mutual agreement. So both parties discuss and agree to cancel or adjust the arrangement. Yeah, it could be individual, but his parent needs to be involved this time for sure. And if not, they could go on to a mediator using the mediation option where they invite a third party who is a mediator, and this person will guide them to make a decision, but doesn't make the decision on their behalf, right? Um, I know I have parent interviews and settles the matter. I literally think the parent should intervene from number two, option two, because if Mr. Cole had the audacity, first and foremost, to make an agreement with a minor, he must know it's a minor. Like you could tell 13-year-olds a lot of times. Um, then he would most likely try to manipulate this young boy in a negotiation because he may not be able to negotiate well at his age. So his parents should be around even with that.